Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Tuesday, August 13th. Remember inflation? The July CPI report comes out on Wednesday morning, so we'll see what's going on with inflation. The consensus is for a 0.2% monthly rise in the headline number, with the annual rate staying at 3%. The market is pricing in a 100% chance of the Fed cutting rates at its September meeting, but it is a coin flip on whether the cut will be 25 or 50 basis points, while a softer than expected CPI print would swing the pendulum to a 50 basis point cut. Then, on Thursday, Walmart highlights the earnings calendar this week, but we also have earnings from Home Depot, Alibaba, and Target next week. The general view is that Walmart will continue to benefit as a defensive stock pick if the jittery trading in the global markets continues, but the retail sector as a whole is on watch to hear its take on the pulse of the US consumer. Expectations are running high following a 29% year-to-date rally. The consensus is for a revenue of $167 billion, EPS of 65 cents, and the US same-store sales growth of 3.3%. Let's run through some headlines. Disney's biannual D23 happened last weekend, and Disney said a third film in its hit Pixar series Incredibles was in the works, and gave updates on several of its other franchises, such as Moana, Avatar, and The Mandalorian. The studio business has been on a bit of a roll this year after a mixed post-pandemic box office performance. Pixar's Inside Out 2 and Marvel's Deadpool and Wolverine have become the top highest-grossing films of 2024. Fun fact, Deadpool is only the second R-rated movie to reach $1 billion following 2019's Joker. Disney also gave a sneak peek of Moana 2, which they project could also join the billion-dollar club this year. Disney announced it will add 4 new cruise ships to its fleet by 2031, and add park attractions such as a new Villains Land in Orlando, a new Avatar-themed attraction in California Adventure, and a new ride around Monsters, Inc. at its Hollywood studios. Disney Tokyo and Disney Paris are also getting new rides and attractions, which means every single park is getting some sort of improvements. So despite Disney reporting a slight slowdown in their parks division last week in their earnings call, they're still committing to spending over $60 billion over the next 10 years to improve their parks, cruises, and everything involved in their experience division. Let's shift gears and drive overseas. WeRide, a Chinese company focused on autonomous driving technology, has filed for US IPO, according to the SEC filing. WeRide plans to offer about 6.5 million American shares at a price range of $15.50 to $18.50. The company also announced plans to raise $321 million in a private placement backed by investors, including Alliance Adventures, the venture capital fund of the Nissan-Mitsubishi Alliance. After commencing operations in 2017, WeRide has launched its autonomous driving vehicles across 30 cities spanning 7 countries in Asia, the Middle East, and Europe. Speaking of EVs, EV fires in South Korea raised concern about the industry regulations. A major fire on August 1st took 8 hours to put out and destroyed about 140 cars. This was found to have been caused by an unplugged Mercedes-Benz EV that was parked below a residential building. Over 600 such fires have occurred in underground parking lots in the country over the past decade. South Korean officials are now weighing whether to require electric vehicle makers to disclose their battery brands at the time when EV sales account for 15% of total vehicle sales. An iconic company struggling this year is Starbucks. Their sales are down all over the world, especially in China. Their same-store sales in China declined by 14% in their last quarter as Chinese brand Luckin Coffee now has more shops and name brand value than Starbucks. The Wall Street Journal reported that Starboard Value, an activist hedge fund, took a stake in the coffee giant. Now the size of the stake is currently unknown, but Starbucks has become a target for activist investors. Starboard is not the only activist investor investing into the company. Elliott Management, another famous activist hedge fund, bought a stake in Starbucks last month. And what these activist hedge funds are looking to do is force some changes at Starbucks to turn around the company. Starbucks stock is nearly down 20% this year. Now it's seeing a nice little bounce today, up 2% in the pre-market in reaction to the activist investors buying in. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Shares of Eli Lilly, the makers of the Zepbound weight loss drug, are up after Deutsche Bank upgraded the stock to a buy price target of $1,025 per share. Now this upgrade comes shortly after Eli Lilly raised their outlook for the year after building new factories and production lines to keep up with the demand and produce cheaper drugs than their rival Novo Nordisk, the makers of Ozempic. Shares are currently trading around $900 per share in the pre-market and up around 2% as a result of this upgrade. Now, on the flip side, shares of JetBlue are falling after they issued $400 million in convertible debt due in 2029, and the airline is raising cash to cover up some of their debt. They're taking out loans to pay off existing loans. JetBlue has around $1.3 billion in cash on their balance sheet and nearly $5.4 billion of debt as of the recent quarter. I mean, the company is trying to turn itself around by cutting various routes and focusing on the ones that have been strong, such as the ones in New York and in the New England area. But the airline just can't seem to catch a break. It was supposed to merge with Spirit Airlines, but then the antitrust regulators turned that down. JetBlue shares have fallen more than 67% in the past 5 years, and shares are down 6% in the pre-market on this news. That's all for today's show. Keep navigating those waters and see you tomorrow.